The problem is that people in this mad rush to implement AI are not measuring it. The problem isn't that AI on its own is not effective. The problem isn't that AI on its own is wasteful. They're not measuring the actual output of it. And now that they're taking a step back and measuring the output, in 1 week, you have 4 different CFOs being like, we're not so sure it's working, right? And if the public company CEOs who are so focused on KPIs are like that, imagine what's happening in the venture-backed, portfolios.
Because if you can find those companies that are becoming 10 times more efficient, not 10% more efficient, right? Those are the companies that are really going to re-rate in the market. I think basically the newest grads, they need to be the smartest AI person in the room. They need the ones that I'd want to hire, or that I'd recommend anyone hire, as you said, the most curious, willing to learn. If there's 20 kids or looking for a job, the one who's the best with AI is probably the one that you want to hire.
And you know what I like about that positioning is that that's not something that you just learn when you turn 18 and go to college. The people who are curious have always been that way.
It's a jetpack to people who have those skills. Yeah.
It's like these are the types of things. If you're curious, if you have a high learning capacity, if you're relentless, you were probably like that 10 years ago, even before you came to college. And so I think that actually helps sort the crowd a lot faster, because a lot of kids can do Excel, but very few can convince you that they have this innate curiosity that has enabled them to be the smartest AI person in the room. Because just saying, I want to be the smartest AI person in the room doesn't actually get there unless you have that innate curiosity to go figure it out.
So that being said, what I would couple that with is that there are certain, in my opinion, certain skills that technology obviously automates in places that I do think are still valuable. I'll give you an example. Calculators have obviously replaced people doing most math, right? But I really want my kids to learn very proficient mental math and be very good at it without a calculator. That's a skill that I use today, every single day, being able to quickly do math in my head on basic things in finance and valuation and expected returns. And if you are someone who never had to struggle to learn how to write or to do, quick mental math or some basic things, I think that's going to be a real problem. And there's a lot of people today that don't know how to do quick mental math, but I can say it's like probably one of the best skills I've ever learned. It's helped me my entire life. And I don't want someone who, they just used a calculator and AI to do every math problem, and they never had to struggle to learn how to do the arithmetic, and then it's the sense.
Yeah,
I think you're not doing it every day as part of your job.
You're not. Yeah, you're not.
For me, it's like everything that I think about it.
I think it matters. Like if your kids want to be a musician, or want to be an artist, or want to be a salesperson, like the math in your head, basic, everybody should know, but having this like super calculator in your head isn't going to help them the way it helps you as chief investment officer. It's just too different.
So I think if you're in a finance role, it's going to be really, really important. If you're in an investment banking role, it will remain really important. To be able to very quickly look at numbers and say, that's an issue, that's an issue, that's an issue. Right now, AI does miss a lot of things. Every time I use AI, not every time, but most of the time I use AI, it's still making mistakes. And I'm catching things. And it's basic stuff. It's not like I'm not some math whiz, but knowing that the percentages should easily add up to 100 and they don't. Just basic stuff like that. It's important.
Mythos solves this, right? That's what we were told. Mythos is going to break the world.
By the way, in my opinion, the most brilliant marketing they could have done. It is so great and so powerful that we're not going to release it. I thought that was brilliant. Mm-hmm. Because the model will come out and you will see it and it will be better, but it will be incrementally better. It's not this end of the world kind of model, but they just added probably $200 billion to their valuation because of the great marketing trick that they played.
Well, what would you bet is the percentage improvement?
In?
Ability to diagnose
we've
problems.
had the same that we have had for the last 6 generations that they've released.
I think it's going to be a step function. I think obviously they want to market it, but I think they want to market it because it's a step
pick the
function.
last step function, whatever that was, 20%, 30%, 40%. The models are not at this stage getting 500% better. They marketed it like it got 500% better, but my bet is on the benchmarks, it will obviously be better, but the last step function, I don't know the numbers, was maybe, 10%. It's going to be something in that range because the numbers are already getting there, right? Like the coding models are already in the 60 to 70% range. You can't take a 60 to 70% range and then suddenly it becomes 99.99% in one step function. So we're talking about improvement, but the marketing was great.
The thing about exponential adoption and exponential skill increases is that there can be huge unlocks from time to time, and they're hard to predict. But I legitimately think that, we've kind of seen some of the announcements that they've made. I don't have the numbers right in front of me, but some of the things that they've talked about the number of zero-day exploits that they found, it's not like they found 10% more. They did find 500% more.
No, but it's not 10% more. So what you're talking about is the models are already 60% on the benchmarks. 60% is like a pretty average number for most of these coding models.
I'm not talking about the benchmarks. I'm talking about the real world.
Yes.
You're finding a real exploit. Yesterday you
They're not finding 10% more, but the point isn't that they're finding 10% more. So the point is when you go from 60% to 70%, they find thousands of more vulnerabilities. They don't have to go from 60 to 99 to find thousands of more. So that's, you asked me what the improvement was. I'm saying that as going from 0 to 60, you could do a big step function changes. But once you're already in the 60, 70 range, the step function changes also have limitations. There's gravity to these things. They've already used much of the data that's available. They've already thrown much of the compute that's available. And so it will still be a step function change, but in terms of percentage improvement, you're now getting to the last few bits, and you're not going to get this like 60 to 99 over one full swing.
How will you evaluate whether your opinion is
They're already finding thousands of bugs. If they can find thousands more.
Before, a lot less, right?
No, I'm saying they were.
It's been incremental. 3.5 is better than 4. Now 4 is not allowed, or it's not even being used anymore. So like, and what was great about the model, besides the marketing and the story behind it escaping, giving itself access to the internet, and mocking the guy that challenged it to, it's a fantastic story, was the fact that it found a lot of day one vulnerabilities that many sophisticated software engineers knew existed. Yeah. Now, everybody should feel a whole lot better that there's a model out there that it may or may not have been specialized enough to find those day one vulnerabilities and make the products a lot safer. And so like, I think that's the most important thing of this, is not necessarily how many bugs did it find day one. It's like, okay, the products are getting better, and now we can build companies in a more safe and structured way than what we could 3 years ago, or actually in the history of making software. So these have always been there.
And the improvements cannot be exponential from here. The adoption can. But when you're already at 60, 70%, there's no space for exponential improvement. There's going to be incremental improvement. And I don't think we'll ever get to the 99% range. We'll continue to, the benchmarks will get harder.
What percentile are you measuring?
Well, I mean, the Turing test used to be the standard, and you could argue 3.5 broke through the Turing test. Yeah.
Like, and so that's the point, is that these benchmarks will continue to get harder and harder, and there will be more and more competition. And so we will continue to improve, but nobody's going from 20 to 90 in one fell swoop. The data, like the argument is there is new sources of data or new sources of compute or new ways of training the model that's getting this improvement. A lot of those things got that big first jump in 3.5 and above. So from here, it's going to be incremental, in my opinion. And the incremental will make a massive difference in the world. Doesn't mean it's a small change. It just means from a performance.
Then you kind of call it incremental. Because the only thing that people actually care about is the real world KPIs. Nobody cares about the benchmarks. So in the real world, if you are solving 1,000 problems instead of 100 problems, 10x is extremely significant. And it doesn't matter if on a benchmark it's 60% to 65%. What only matters is the actual real world output and solutions. And so, yeah, if we are
how do you you can't measure that?
I'm saying that if before
That's why you have benchmarks.
a benchmark is a tool to compare these models.
Yes.
But what a CEO of a software company cares about is how vulnerable their software is. So if their software, they used to find one bug a day
and solve it, and now they're finding 10 bugs a day and solving it. That is, to that company, a 10x improvement. Doesn't matter what the benchmark says, that's a 10x improvement on efficiency for that company. And that's going to have awesome impacts on the economy, right?
No, I understand, but you're trying to,
productive.
but there might be another company where there's no improvement at all, correct?
So
That's the purpose of a benchmark, is to take the average of all that improvement and try to measure it consistently over time. So I understand your point, I get that, but there might be companies that are already using the LLM so well, the current versions, that they have solved many of the day one vulnerabilities already. They have a really good security team, they've already solved the issues. So the point of the benchmark is not to say that there might not be somebody with a massive 1000x improvement. The point of the benchmark is to say, on average, across use cases, where are we standing? And yes, we're making improvements, but I don't think there's going to be, for tens of thousands of companies, 1000x improvement at this stage.
It seems like this particular model was specifically trained on, probably some proprietary hacking data, right? So that they're highlighting this particular use case. And it's probably not an 10x improvement on a finance use case or some other use cases, right? But it is a pretty incredible breakthrough. If you can, from one version to another, achieve a 10x at anything in the real world, that is awesome. And that is a pace of innovation and change that most companies never experience, right? It is akin to the internet, automating some things that were done by paper and automating it with the internet. And the more of these unlocks, where something is now 10x more efficient, the more profitable all of these companies are going to become, and we should probably expect the markets to go up from here. And I'm very, very excited about this productivity unlock from AI.
So you're long Anthropic at 960 billion?
Well, what I was just saying is I want to long the companies that are actually enjoying those efficiencies, and it's reflecting in their income statements. So I don't think that applies to the makers of the models, which are largely dependent on external rounds of capital, and they're subsidizing the usage of their products. But I want to bet on the company that they get to use a new version of the model, and now what used to take 10 people takes one person. And they are not sharing that 90% efficient, or that 1000% efficiency gain with their employees. That is mostly going to the owners of the company. So I think it's really important to be an owner in this efficiency wave. That's what I'll call it. We had the AI infrastructure build out. Now we're having the beginning of this AI efficiency wave. These companies that are applying AI becoming much more efficient, and a lot of that's going to get captured by the company themselves, and it's a good time to be investors in those companies, in my opinion.
What do you look for in those companies?
Well, I think we need to see it. So it's not a storytelling exercise. We need to see it in their financials. We need to hear it in their use cases. If there is a company that is out there saying, "Hey, we replaced 10 people with one AI," that's interesting. Now, on the other hand, there's also companies that are saying, "We've spent millions of dollars on tokens, and I think we can justify it, but not really." That's what the Uber CFO said the other day. That's what the Match Group CEO the other day was saying, that they're spending an additional $5 to $10 million on AI tokens, and they don't really have any revenue or cost savings to show for it. So what they're doing is they're slowing hiring to try and rearrange their budget, because they think that they need to use AI, but they're not yet finding the efficiencies from using it. So it's important to be discerning and actually find the profit and loss impact on a company by company basis.
So if a company fires 10% of their workforce and then says, they have, we've broken through AI, we're getting more efficient. Do you buy that from an AI standpoint, or do you buy that as an AI washing? Like, what is it that you're looking for in these companies? Because Probably right, but I do think, at least on the surface, what it looks like is you guys are bloated and you're firing people, and you are now allocating those tokens to people who benchmarked higher inside the company, and that's your AI efficiency gain.
Yeah, that's a good question. And I think, honestly, I think there are a lot of bloated companies out there. There was definitely a lot of overhiring during COVID and the low cost of money times. There's probably going to be a lot of layoffs and continue to be. We've already seen some that are needed to happen anyways, whether AI made the company much more efficient or not. So what I would look for is not a one-time layoff. What I would look for is a continued increase in the KPIs and the financials of a company that show the company being able to do more with less on a month-to-month, quarter-to-quarter basis over a extended period. And so that's how you would build that conviction that this is not just
a one-time thing that they need to cut the waste and use AI as an excuse, but that a company is actually inflecting. And now they can serve 10 times the amount of customers or 5 times the amount of customers as they used to for the same amount of employees. That's what I'm really looking for. Because if you can find those companies that are becoming 10 times more efficient, not 10% more efficient, right? Those are the companies that are really going to re-rate in the market.
So really what you're looking for are no hire, no fire types of companies that are growing.
Yeah, so there's a company in our portfolio that it's an insurance company. And basically what they've showed for the last couple of years, every single quarter, is that they're able to serve more customers with the same amount of employees. And that's been a trend for like 3 or 4 years now. And it doesn't look like it's stopping. Like all the guidance from the company is that they keep on implementing the latest AI model and they find more efficiencies. And now, quarter after quarter after quarter, they're able to serve another, few percentage of customers without having to add variable costs to serve those customers. That's producing a type of operational leverage over time that historically has resulted in pretty good investment returns.
Yeah, I understand the step function being a good way to look at this, because I think over time it will just become the bare minimum that you can do to get efficiency improvement and productivity gains. So you're really looking for companies that are getting exceptionally high results from that efficiency gain, because it would be maybe similar to some public market CEO coming on an earnings call and say, hey, we want to announce and tell you that we are using email in our organization now. It'd be like, you don't get credit for that, right? That's just the bare minimum. So I think somebody saying, hey, we use AI in our process and we have 10% more efficiency gain, that's kind of like saying we use email.
That's just to keep up.
That's just to keep up. That's just the bare minimum. Now you're looking for ways where there is that, not this big chunk of layoff, and then suddenly now the company is the right size. It's this, like Richard is saying, this relentless focus on efficiency, and whether that comes from AI or it comes from traditional technology or just becomes from more scalable products, that's all fine. But you have to have this like relentless focus. And Jeff Bezos was saying it in a nice, he put it in a nice way, which is not a political statement, but he was like, if I was running, New York schools, people would be upset because the packages would show up in 6 days instead of 1 day, and you would get the wrong package every time. So it's like, you have to run all of these organizations, whether they're government organizations or companies, public, private, doesn't matter, with this relentless focus on improvement and efficiency. And if Amazon, at least, is known from a cultural standpoint, they're known for that relentless focus. And so before AI came, they had that relentless focus on efficiency. Now that AI is here, they have that relentless focus on using AI for that efficiency. So I don't think you necessarily like wake up one day and become this relentless focused company on efficiency. I think it's a little bit part of your leadership and your DNA already. And it's going to be, in my opinion, the same companies that got those efficiency increases with the internet, with the cloud, with mobile, with all these previous technologies that are going to be the main beneficiaries of this technology as well, I don't think that really changes the culture of the organization.
Well, that goes against a lot of what we're hearing in the market then, as far as AI is going to replace a bunch of jobs and, we're all going to need universal basic income. You guys just got back from San Francisco. I'd like to hear what your guys' thoughts were on where we believe the state of this technology is.
Yeah, obviously it's not a super well-informed view, but it's an informed view. My general sense is, as we sit, not necessarily inside of that, I will call it a bubble. I think there are some pretty aggressive expectations being set and some pretty lofty pitches being made to justify and differentiate the pretty incredible fundraisers that are going on. Because of course, if you sit down with a venture capitalist or you sit down with an early stage investor and you talk about how the world is going to be 10% better, they are going to look for a more ambitious founder and they're going to look for a more ambitious vision. So I do think there is a lot of extension of reality. I do think there's a lot of over-commitment where the technology fundamentally is not there today. If the technology is there, then the infrastructure is not there today. If the infrastructure is there, then the companies using the technology are not ready to implement it. And so I just generally feel that in order to justify these tens of billions of dollars of valuation for very early stage companies, I think people are making some pretty lofty promises. And I think if enough people make those promises, it starts to sound like reality. But then you take a step back and you look at the actual implementation inside of businesses that we have to deal with on a daily basis and the actual financial results in companies that we try to study on a daily basis. And there is a stark difference between what's actually happening today and what's probably possible today and what is being pitched, I think, inside of bubbles like Silicon Valley.
Yeah. So I'll say that I saw quite a huge difference between investors, potential employees, and operators. So one of the scary comments I heard someone say about a venture capital investor in San Francisco is that they were looking at these different opportunities, and traditionally these might be a bunch of interesting deals that would fit inside of a venture capital portfolio. They're looking for, to make a variety of bets on high growth type of startups or high potential startups. And the comment was, why do we need to invest in any of those? Because I can just put more money in Anthropic. Like, it's just like the easy way to make more money. Just give them more money, they'll just keep on going up forever. To me, I was like, whoa. So they're not even doing their own model anymore. Now they're like going late stage into almost $1 trillion private companies with, not enough revenue and growth to justify that valuation, in my opinion. So that was a little bit concerning. Another concerning thing, which I think only happens during bubbles, is when you have, so one of the people we met is an MBA student at Stanford. And she was saying that she's had several of her classmates quitting their MBA program to go join Anthropic and OpenAI at already these $1 trillion valuations. And that there's kind of this feeling if you don't quit your Stanford MBA to go join a $1 trillion AI startup, that you're like a loser. Essentially, I mean, she didn't say that, but that's my interpretation. No, basically, it's like there's like a fear of not dropping out because you're going to be left behind all of your other MBA peers. The permanent underclass. Well, yeah, historically, it's been a good idea to finish these MBA programs.
I know, and then you have some like really crazy things happening where public SaaS company CTOs are leaving their public SaaS company CTO positions that obviously they've worked really hard to get to, and they're joining as engineering staff at Anthropic. That has to be just, and that, by the way, has obviously nothing to do with the quality of business that Anthropic is and the exciting things that they're working on. It has nothing to do with that. But a lot of those things, when put together, where investors are telling you that there's no better, more certain way of making money than Anthropic. Students are telling you there's no better career in the world than Anthropic, right? And then you have potential employees of like really senior executives at companies leaving because they're worried they're going to be forever in the underclass of San Francisco and joining these companies with a massive demotion, if you can have one. All of that together really makes me feel like it is an interesting business. I use the products myself, but I think they're really fantastic at the positioning and the marketing. And that combined with their success is making people see them in a very different way than they would.
But before, just because there's a lot of excitement doesn't make something a bubble or not. So I'll give you the contrast. Because if on the other side, the people that were using OpenAI and Anthropic were actually building Salesforce overnight and distributing it, and like if the SaaS apocalypse was real, then all of this activity, in fact, would be justified, in my opinion. But we also met with the head of a organization that employs hundreds, if not thousands, of software engineers, and got deep in the weeds from an engineering point of view on software development and using all the latest tools. And my impression was, his take is that all these tools are great, but there are some efficiencies to be gained, but there still must be humans in the loop. You definitely cannot trust these tools to build secure code bases. A lot of these vibe-coded things, actually most of them was his opinion, have holes, and you need to spend just as much time fixing the holes, and it might have just been better to do it the old way. Like, only in a limited number of circumstances did he actually suggest using these tools, and that the efficiency gains were minimal. They were not the 10x or 100x gains. It was like, I kind of got this feeling like, yeah, like we're going to be 25% more efficient.
Yeah, and that's actually pretty spot on what the numbers are that we see across our engineering teams, because it is objectively true that you do write 10 times or 20 times as much code, right? So when you look at it from just volume perspective, yeah, of course, like the thing can write, in 10 minutes more code than a team could write in 10 months, right? So that's true. But how much of that is production grade code and how much of that is rework that has to be done to get it to production grade code, that's where the efficiency really should be coming from, right? And the discussion should be. So you've obviously been studying this very closely. So he has specific statistics on where we're actually seeing from an engineering standpoint, that number kind of settling in with all the noise kind of in the background. Because if they came out, like if Anthropic or the people who are selling Anthropic inside of coding agents came out and said, hey, we will get you a 20% net improvement, but you have to spend the same amount of money that you pay this person as a salary, you have to spend the same amount of money in tokens. They would have never sold the product, first of all, and they would have never raised the billions of dollars that they've raised. So the pitch had to be, look at how much code this thing can write. But on a net basis, Brad can give you some more numbers.
It's 18%.
18%?
18.
Where do you think the number will be in like a year?
I mean, it'll get better, but like we talked about, 44% is still of all tokens is still used on just bugs.
That was
fixing
created
bugs.
by the AI.
Yes.
So these are not existing bugs.
Yeah. So 18%. So if we were to circle back on what is grounded reality, is when you come into a business, typically middle markets are the one that signal this first. Investors are saying, okay, my token spend has gone up 13x since last year. I cannot forecast a full year if you're continuing to spend this kind of stuff on tokens. So they're crying out for efficiency. The number showing only 18% is actually production grade. And then now you're seeing Satya Nadella come out, right? You're seeing The term token maxing became a thing, so much so that Sam Altman went into Y Combinator offering $2 million in tokens in exchange for equity. So, okay, great. 18% of that's only going to be production code. Like, so I think what you're saying, and Silicon Valley I haven't been through all the cycles, but I think when you hear things like it's either I have to go work at Anthropic because my $500K a year salary is going to put me in a permanent underclass. I have to leave my MBA to go do a sales job at one of these companies, like later stage, not startup, or like later stage, people getting checks just because they have to distribute capital. Like there is this push for innovation, which is important. But the grounded reality is like the companies that are using this technology at the end of the day have to run a business. And these are the largest businesses in the world, and they're going to demand a level of efficiency that eventually will cause this to slow down. So I don't know what that means if you just gave up equity for $2 million in tokens. I don't know what it means for the growth of this platform in the future, because you have to remember the technology that is being sold to all these companies is deflationary. It will go down. That's why they're going into venture. That's why they're going into consulting. They're going into all these other business lines, because at the end of the day, their core product is deflationary, and they have to sell these stories like Mythos to continue fundraising at billions and billions of dollars of valuation.
So if I had to summarize this, I would say kind of like the bottom line is that these AI model companies are selling 100x improvements. Actual companies are seeing between a 0 and 50% improvement. There's a huge disconnect between these private AI company valuations, which look like a bubble, and the employees that are all rushing to them to get rich quick, in their own words, and the real-world results of the companies. Maybe that will change. We're skeptical based on the trajectory of improvement of these tools. What I will say is that it looks like the token costs are declining about 90% each year.
Which is
so
part of this.
So maybe those numbers can meet. Like maybe you can actually have a 10 times improvement and a 10 times fall in the costs. Maybe a couple of years. If we just extrapolate, maybe you can somewhere.
I know,
eventually get there.
and you're probably right about that. But you know the problem with that is that solves the problems for the companies that are buying the technology. But it doesn't solve the problem of the trillion-dollar valuations that we're giving the companies that are selling the technology. Because what you're saying is that the cost will decline so rapidly that the promises that they've made won't matter anymore, because for the efficiency improvement they're seeing, it'll be worth it. So what really should happen to justify those trillion-dollar valuations is that the efficiency improvements are increasing so much faster that even without a decline in the price, it's still worth it for the end customer. And that is what I'm very skeptical of, because we have I think the unique perspective of not just investing in this technology, but actually building with this technology. And not just inside our business, but inside of many other businesses. And so we get to see how it works in different industries, in different scale of businesses, in different use cases. And this improvement that has been promised for the last 4 years. And if we are today sitting at 25%, after billions, tens of billions, hundreds of billions of dollars have been spent on it, that's why I'm skeptical of this like step function improvement that shows up tomorrow. Right before the IPO, it'll show up, don't worry. No, not before the IPO, after the IPO. So just sign up for the IPO, and then the production and the end customer, the productivity will be there. So my thought is, this is how essentially all technologies are. It is humans will overestimate their potential in the short run, and they will severely underestimate their potential in the long run. And we are, in my opinion, deep in the overestimation cycle. But in 10 years, we will look back and be like, oh, you remember when people used to get 25% improvement in their code productivity, now we're at 5,000%, and that's just how the world is now. But in the short run, where these IPOs are happening, all this stuff is happening, I don't see how it goes from 25 to 50% in the short run, because all the IDE tools that could have been built have been built. All the model training that could have been done incrementally is being done right now. There is not this, oh, let's wait another 4 years and then it will happen. This has been billions of dollars spent already, and it is obviously an improvement, but I don't think it's an improvement that justifies the multi-trillion-dollar valuations. The same improvement at $100 billion valuation, I'm like, that makes a lot of sense. But I think we've gotten ahead of ourselves here.
Yeah, and we're probably going to eventually short these companies if they stay at these valuations. That might be surprising. We're kind of like an anti-AI strategy in that we are, right now, we are calling out the bubble. We do invest in this AI efficiency wave where you can measure it in, profits of companies buying that declining cost curve. But on the seller side, we know that historically, CapEx cycles have been cyclical. There's basically been no cycle that hasn't turned at some point. There's always an overbuild, whether it's railroads or whether it's fiber. It's just so hard to perfectly match supply and demand, and investors in a frenzy will overfund the supply side.
But this time it's different.
This time it's going to go on for as long as it goes on.
No, but this one's different. And it was funny because people literally said those words to me like a week ago. I was sitting with a bunch of other investment managers, and I'm trying to talk to them through this actual efficiency improvement, right? Because if you're an investment manager, you're not deeply using the technology, you do buy the marketing that's been put out there, right? So I was trying to show them, I was like, we actually use this across hundreds of engineers. So this is my result. You don't have to believe my result, but I'm telling you what the result is. And they're like, no, we were around when Cisco was a bubble. We were around when XYZ company was a bubble. And this time it's different. Well, they literally use those words.
Yeah, so even if you do make a ton of money investing in OpenAI and Anthropic, the way that productivity works is if you increase your productivity and the amount of work that, like, value that's created, well, that then results in demand for more value. And that continues to compound and compound and compound. It's not like, oh, Susie got this done, now that's it. It's like, no, like Susie's going to go do level 2 and level 3 tasks where she was assigned to level 1. So while this is important, this follows every other historical trend. And I actually had a conversation with my grandpa who started his own manufacturing shop in the 80s in Peoria, Illinois. And I was talking with him because he was asking me about AI. I think my family just thinks I do stuff with AI. I don't think they know what I actually do. And so I was asking him about, and I was explaining about the cycle and productivity. He said, it's funny, is during the time when I was, when we were scaling up the manufacturing business, there were a lot of breakthroughs in manufacturing and compute. And he said, my financial advisor was not advising me to buy John Deere or buy Caterpillar. He said, you need to buy Brunswick, the pool table company, because we are no longer going to have 40-hour work weeks. We're only going to have 32-hour work weeks, and people are going to have more time on their hands, so then they'll buy pool tables, and you should buy Brunswick as a result of it. And he's like, here we are today, 2026, and everybody's still working 5 days a week, if not more. So this time it is not different. Now, one thing I will say is where it can be different, and it might be different, is this could be one of the biggest booms for the application layer and the amount of value that is then created. If you look historically, like how much value was created at the infrastructure layer, it's probably what on average, how much is it? 40, 50% of the actual cycles created at the application layer. And look at the internet today. It's not Cisco and AT&T that are the biggest companies in the world. It's Google, it's Meta, it's Amazon. So these platforms will be incredibly powerful, but the amount of new verticals that are created, the amount of businesses that are going to accelerate, like there's going to be so much new growth, and the people that are leaning into it are going to be the beneficiaries of it. And so we can thank these companies for building this technology that then we can go build our applications off of. So
I don't think there's any doubt that this investment of capital, the $65 billion that Anthropic investors gave them this last week, I don't think there's any doubt that that's going to be great for society. It's going to be great for the technology. The question is whether it's going to be great for the investors. That's the question. And in the internet cycle, it was the same thing. It was absolutely fantastic that capitalists came to the table and funded infrastructure that they did not benefit from because those companies went bankrupt, but we still benefit from that today. If you're listening to the podcast, you're listening to it on the backs of that infrastructure.
Yes.
So the question isn't whether it's going to be impactful. The question is to which stakeholder. And what we're skeptical of is that the stakeholder that gets the most benefit out of this is the investor that's coming in at this stage of the cycle.
Yeah, I'm ready to go short. Unfortunately, these companies are not public yet, so we'll have to wait and see their valuations and their results. But that's probably going to be a potential future trade for us. Not financial advice,
right.
but we'll see what happens.
So actually, I want to hear Ben's perspective on this. As somebody young coming out of college and joining the workforce, how much of what you see on, let's say, Twitter or LinkedIn and things like that, like how much of that anxiety and fear do you think is in your colleagues and your friends, and how much of it do you think is justified?
So I think a lot of it is definitely, we're all aware of AI. I think in my peers, we talk to kind of a lot of people just join the workforce who have jobs, and there are people who maybe don't have the jobs they want, and they kind of maybe blame it on AI. I think that's definitely a trend, but we're all kind of fearful as a generation that the skills we have learned over the last 4 years of I graduated college are not going to be useful in the coming 4 years. And I think a lot of that, I think you could say is true, and a lot of that you could say maybe not so true. And the only way to address that is we'll see what actual skills are needed in the next few years, and what skills can be replicated by these AI models and the applications of them. But the fear is definitely there. And I think the way that people are reacting to that is kind of by ignoring possibilities of pivoting to other options.
So they're going more back to what's familiar?
Absolutely. I think that's normal. That's a human reaction to change, is to resist it as much as possible. And I think that's what you're saying, like this mass kind of dispopularity in AI. It's like AI is the least popular thing.
Really?
When you look at, well, if you're not talking to people like us who are using it, it's like...
That's how you know we're early, right?
If you're talking to middle management, and this is the people who are working at companies for like 30 years, and you're talking to grads, like that's where you see like Eric Schmidt get booed at the Arizona commencement speech. That's the general notion of these technologies are going to take everything away.
There tends to be about a 10 to 15 year lag between the early adopters of a technology and the late mainstream. You see it with every cycle. You see it with the internet.
But this time it's different.
No, I do feel it's justified, because these companies that are now the most highlighted companies in the market are touting that AI is coming for us all. UBI is going to be a thing of the future, where there's going to be so much wealth and prosperity. We're going to have robots running around doing all this stuff for us that we're just going to be thinking about space travel and enlightenment forever, because there's just this infinite amount of and yet we haven't seen anything come close to this is justifiably replacing this job, where it's at one point being an elevator doorman was a job. Now it's not. It doesn't mean that guy stopped working. It just meant, okay, there's probably a more valuable job for this guy to do, as opposed to sitting in an elevator all day, pressing a button on behalf of somebody else. Maybe he's at the counter now. Maybe he's taking the whatever. I don't know. Whatever job in hospitality that led to. But it's going back, we're at peak hype. There's been nothing with AI is making these businesses better. It is absolutely part of every value creation strategy now, as it should be, right? But it needs to be measured.
Yes.
Because the companies that are using it the right way are not firing people. If they're firing people, it's probably because they were bloated, and it sounds a lot better to their shareholders that it's AI.
Absolutely.
Not me, over hiring and not running efficiently.
Yeah.
Right? And the company, and I saw Benioff today say, we didn't fire any engineers last year, and we hired 20% more sales reps because we have that much more demand for our product. That is the power of AI. It's like, I don't have enough people to sell this thing. And my engineers are pushing more and shipping more than they ever have.
I would make a bet that Jack Dorsey, the Block CEO, fired a ton of people in order to make room for having AI report to him directly. I think the bet is that will not work out.
Well, that's a unique. To me, that's a unique case because he actually ran two public companies at the same time. The former was Twitter, now X. And Elon Musk famously came in and laid off 75% of the staff.
So he has a history.
So we have a history
of bloated organizations. So but you're right. Like, no CEO wants to face shareholders or their team and say, I bloated the team and I'm firing you because of what I did.
Yeah.
It's way easier to say, well, I really wanted to keep you around. If it wasn't for this thing that forced my hand, right? And so Richard's exactly right. He has a history of running bloated organizations. It has nothing to do with AI. And I don't necessarily think that, Block kind of falls apart, but it is probably the more obvious version of AI washing out there. There are other companies that are legitimately, able to do more with less. But I think the best companies, which is what Brad was talking about, the companies that I get excited about are the ones that are saying we are so much better as an organization that we can serve more customers, we can charge them less, and make more money doing it. And so we couldn't possibly fire all these people because we have more demand than we've ever had before. And so those are the companies I get excited about.
You want AI to be part of an efficiency flywheel that can be measured. That's the bottom line.
Yeah, the measurement, I think you guys are hitting the nail exactly on the head, is when you are generally speaking, venture-backed company, you are not as focused on measuring every last KPI the way that a publicly listed company would or a more established middle market company would. The problem isn't that AI on its own is not effective. The problem isn't that AI on its own is wasteful. The problem is that people in this mad rush to implement AI are not measuring it. They're not measuring the actual output of it. And now that they're taking a step back and measuring the output, in 1 week, you have 4 different CFOs being like, we're not so sure it's working, right? And if the public company CEOs who are so focused on KPIs are like that, imagine what's happening in the venture-backed, portfolios, where they're just like, hey, I have to show my investors that I used 1 million tokens this week. It doesn't matter what they did, but that's the KPI that I'm chasing. So I think the right approach is not to not implement it. The right approach isn't to jump head first and then figure out what the measurement is. The right approach is just like any other business or any other tool you would have used before, is you set up a way to measure its impact, and then you start to invest capital into it. If you get good results, you invest more. If you get bad results, you find better ways of doing it, and then you try again. And a lot of companies kind of threw that out the door because they were getting this incredible pressure from stakeholders and customers and everybody else to implement AI. And we're just taking, I think, a step back, and everybody's now becoming more measured in their approach to AI. And before it was kind of like, let's maximize the tokens and something will work.
Yeah. If I were to empathize with fresh graduates in some sense, is that because it's still early in these breakthroughs, there could be this awkward phase between new verticals being created, new companies being created, versus companies benefiting from existing productivity and not needing to hire more. Like I don't, good for Salesforce for being able to hire 20% more, but they didn't hire more engineers. They hired more sales reps. And so I do think that at the application layer, there will be so many more new companies built. Just like coding agents is a new vertical, there will be other verticals that have not been thought of. I'm sure these companies that are spending millions on tokens, when the technology is deflationary 3 years from now, that'll be cheaper. I'm sure those businesses are going to boom. There will absolutely be more verticals, but I do think there could be a level of difficulty for a lot of these fresh grads.
Right now, because when the leadership doesn't know, they don't want to be in a Jack Dorsey situation. They don't want to go hire a bunch of fresh grads and then the models get so much better in 6 months that now they have to let all of them go. So there is this awkward phase, I agree with that, where before we get these entirely new generation of companies, where, today, I don't know, Meta, I think they also fired a bunch of people, has 80,000 employees, right? 20 years ago, that business model didn't exist. There was no such thing as a social media website that could generate tens of billions of dollars of revenue. It didn't exist. Yeah. Now, you could have looked at that social media platform and said, well, this is the end of, people getting hired because now there's no need for, I don't know, newspapers and restaurants or whatever else, right? You could have made that argument. But 80,000 net new jobs were created, and probably hundreds of thousands of jobs were created as an impact of what Meta did, right?
Reach more people.
Yeah. But it took 10 years to figure out that entirely new business model and get it to the scale where it was hiring thousands of people, right? So that awkward phase is a difficult phase, but I couldn't agree more that there's going to be entirely new product lines and entirely new verticals within existing businesses and with new businesses entirely that were not possible without this technology, but are possible now, and they will create net, I think, a lot of opportunity for young people. Yeah.
The ones that use it.
No, of course. Yeah, of course. Like if you're young, you don't have the experience, and you resist it, then you have nothing.
Right? That's why I'm saying, if you're taking the average person to hire for an average role, I'd rather take the person with a little bit of experience. But if you're hiring fresh, you better be knowing how to use AI, because you need to have something that can differentiate you.
Sure. Yeah. Like Brad can be a little bit more skeptical of AI because of where he's at in his career. But if some kid walks in and is all skeptical of AI, it's going to be okay, well, you really have to pitch this.
I can tell you that a lot of the work that I used to do as a, fresh out of grad finance analyst, probably 90% of it AI can do. And a lot of the work that I would used to hire, I now use Grok.
I know, but have you used one of the models to make an Excel model? Because I have. So I know on the surface, it looks like it can do 90% of your work. But when you actually audit the work, it's 50% of the way there, or 40 to 50% of the way there.
So basically, if I look up, what I would do in an investment bank, we have a whole, army of analysts, and it'd probably be one associate managing 5 analysts. The associate is to check all the mistakes the analysts made. All of those mistakes the analysts made, for the most part, can be done by AI now. No. But the associate still needs to be the checker.
That's not the reality today. You actually run one of those models, and first of all, I'll tell you the 2 things why I'm not a big believer. I've built many models with that, by the way. Number 1, it is not efficient. It will write 10,000 lines of code to build a model that if I did it myself, I could have done by hand in 400 lines. But the job isn't to be efficient, right? You're an LLM. You throw the whole house at the problem and you see what happens, right? That's number 1. I think number 2 is the reason people get so scared so quickly with any of these applications that they see on Twitter or somewhere else is that it looks correct. It looks directionally very, very good. It formats it really well. It gets the formulas generally in the right direction. But when you actually audit the work, I wouldn't grade the model it gave me, I wouldn't grade it anything above a 4 or 5 out of 10.
To be clear, I'm mostly talking about a lot of the grunt work that is not the most perfect Excel model. I'm talking about all the time spent on PowerPoints and written memos and all kind of stuff. You go to the investor relations, like I literally used to have to, go and read all of these documents and spend, days on it and then write a summary, like all of that, you just replace it with an AI. So that's why I'm saying like so much of the work of a junior person is essentially, it's not really a glamorous job. You're just like, someone who's working really hard for really long hours to meet tight deadlines, but it's basic work that a lot of people could do, to be honest. A lot of that is being completely automated.
Yeah, but don't you think the work just evolves? Like at one point, the place where you went to find new information was the universities because they held all the books. That's where you went. Then the internet came out. Okay, well, stuff's up on the internet now. I can now look up what I need to on the internet. Now, Google made you search and you had to go dig it, but I didn't have to physically go to a library, look up a card, go find it in the book. Like, you could find it in Google. Same thing. If there's anything in the world you want to know, you can now ask AI. And so similarly, these jobs will evolve and entry-level positions will evolve with it. But to think that entry-level jobs are just going to disappear altogether, I don't agree with. I just think that these jobs evolve because what used to be archaic is no longer relevant because we have technology to take care of the monotonous work.
I mean, obviously every department, every job function is different. I can only speak for these sort of specific finance roles that I've been in or that I've, managed. I can tell you that from a finance perspective, the junior level, they need to show some much higher level skills than before. I think it's going to be much more about your people skills, much more about your high level critical thinking skills, much less about being technically good at PowerPoint and Word and formatting and reading something and synthesizing it. And that is a lot of the job. Like a junior investment analyst that you would go have, scout a company. There's no point anymore when you can just ask AI that'll prepare you a beautiful report in 2 minutes for $1. So a lot of that entry level work is already automated away. And now to add value, it is more client facing skills, or it is a level of discernment that you would get from a more experienced person that an entry-level person just wouldn't have unless they've put in the reps themselves and learned how to do it.
So then we should all just hire a bunch of
I think it's great. Like I think the world is going to be a much better place to have us doing less grunt work and more higher level work. But if you're someone who has never had to do that grunt work, you might not have the skills to do what comes after. There's a reason why there's hierarchies in these companies and people train at one level and get to the next. And I'm pretty skeptical about how that's going to change and if you'll be able to skip the level.
I spent time with a few students, but first of all of them have jobs. At least the ones that I.
Those are the cream of the crop. I'm talking about the average.
All of them have jobs,
yeah.
and I think all that.
The cream of the crop will always have jobs.
I know, but I think what all that will happen is the training, the grunt work you're talking about. You're right. It is important for that discernment of what's correct and what's not correct. The taste of what makes sense and what doesn't.
The detail-oriented thing.
Yeah, I get that. I think you can get that experience faster now. Mm-hmm. So instead of it taking 2 years, where you could do 20 live deals, you can now do 20 live deals in 6 months because of the productivity improvement. So you still go through that process, but you don't spend 6 years learning because you see more, you see it faster, you have a companion with you that can teach you all the time, every question that you could possibly have. And so I think net, if you are curious and relentless, you will still be valuable and you will actually learn a lot more than you and I learned in those periods of time that we spent there, just because we have access to more information faster and less grunt work to distract us from the learning. So I think net is still, I'd much rather have somebody who is AI first and relentless than somebody who's 5 years in, has some sense of how the world works, but is going to resist AI. So I think...
Of course, but wouldn't you rather have the experienced person with AI than the inexperienced person with AI?
Not
That's all I'm
necessarily.
saying.
Because I don't think the experienced people are as open-minded.
Assuming that the same level of open-mindedness,
Okay,
the
then
same
of course,
level of curiosity,
of course. If
all
I'm-
else the same.
If I, of course, but my base assumption is that they're not as open to it, which obviously I could be wrong about. So if yes, of course, if they're all open at the same level and all curious the same way, then of course I want the guy with the 20 years of experience then, right? I don't want the 5 years of experience, of course. But generally speaking, as you get deeper and deeper into your careers, you're less and less curious, it's harder and harder for you to learn. That's just a generalization.